Where? Where can they get these dividends?
The new widow and orphan stocks. It's the tech sector.
Tech?
Yeah. Tech is, if you go back about a dozen years, dot-com bubble, patchy profits, and tech contributed a very small amount of the market's dividend payments, around 5%.
Contributed a small amount of the market's profits back then too. They didn't have any.
But the profile of tech has really changed. I mean, you can just think.
Now, up on screen, just to interrupt you there a second.
Yeah.
Look at this amazing number. Look at this. The dividend contributors to the Nasdaq. 13.7% tech.
Yeah, it's gone from 5% to almost 14% in around a decade. And there's not much that would be needed to make it the biggest dividend payer in the market. If Google, for example, started paying a dividend around the, with the sort of same generosity as Apple's dividend relative to its profits, then tech would be the largest dividend contributor. And it's it's kind of understandable because it's the largest sector now by stock market value.
But is it also a reflection sort of also the maturing of the tech sector, that you have companies now generating such prodigious profits that they actually are paying some of them out?
I think absolutely. I think the risk profile of tech has changed dramatically. I mean, we can both remember a time when the business was computers and people sold computers and you had the rich family.
Are you implying we're old?
Well, I am. I don't know about you. Maybe the rich family on the street got
we both can remember pets.com.
No, exactly. And you think to yourself, well, if the economy tanks, no one's going to buy computers today. You've got a computer in your phone. You've got a computer pretty much everywhere. Our pants will be computerized in a few years, and technology has really just sort of overtaken every corner of our lives. So the profits, in other words, don't depend as much. If the economy tanks, that'll still hurt tech, but tech can continue to earn through a bad economy because it's become so necessary.
I guess the flip side of that maybe, though, is how much of there is a worry that for some of the big tech companies like Google, like Apple, while everything's going great guns, the dividends maybe are a sign that their best growth days are behind them. They've just gotten so big that they can't grow the way they used to.
Well, their best growth days are unquestionably behind them.
Although Apple's earnings last night might argue contrary.
Yeah. But I mean, how could they not be? By the time a company gets this large, it just can't continue to grow at that pace forever. Apple is just a unique story of a company this large that's still growing this fast. But this is what happens when they become this big, the growth numbers sometimes slow, but then they become enormous cash generators, and then you look to them for dividends. So whereas in the past we looked to utilities and consumer staples for our dividend yields, now increasingly people are going to be looking to technology as the sort of more stable sector that can provide them cash income.
Right, okay. And who's perhaps the next company to watch for coming out with a dividend increase or introducing a dividend, do you think?
I mean, I think Apple's move puts pressure on just about anyone out there who's not paying a dividend, who's sitting on some cash right now. Certainly Google comes to mind.
Maybe Cisco.
Cisco's got a dividend. eBay maybe. Right. But I think one thing that you could see is big dividend increases. I mean, IBM just had a big dividend because they're still paying a small percentage of their profits. They could afford much larger dividends than they're paying today.